What's up, Mortgage Coach community? I have the one and only Dan Keller with us this morning. What's up, brother?
Hey, good morning, Dave, and good morning, Mortgage Coach community.
Dude, I always get fired up when I do interviews with you. So I don't even know what number this is. This is countless interviews and online content with Dan Keller. We did
number two in 2 days, man.
I was just going to say, it was just yesterday we were on a panel together, right?
Yep.
Yeah, so for the Colorado Association of Lenders, which big shout out to Colorado. They have one of the best state-run organizations in the country. I was bummed that I didn't get to go fly out to Colorado right now. That would have been cool to be there in person, but we did it virtually, and you killed it, bro. So thank you.
Thank you.
All right, so Mortgage Coach community, we titled this, and it was actually Dan's idea, creating wow, because he feels like he has really fine-tuned his systems to create wow. So that was Dan's idea, and that is a theme of today's call. One of my themes of today's call, because this will be the third interview, where I'm super intentional to ask and find out, what are you doing beyond the mortgage transaction? So this Tuesday, I did an interview with Amber Kovark, who closed 45 loans last month. To me, what's really special about that 45 loans is she's a mother of two. And for the entire month, she was in a remote property at her parents' house in North Carolina. So what does that tell you guys? That tells you that she's got good systems, she's got great team, and she closed 45 loans. So that is an interview that we're going to reference a few times throughout this call. If you have not watched it, it's under the category of must-watch Mortgage Coach interviews. Dan, did you by any chance get to check out any of that interview?
Oh, yeah, I was on it live for probably 20, 25 minutes. It's just, Amber's incredible. We were in the same coaching group last semester, so I got to hang out with her a little off Mortgage Coach, but phenomenal. She's just an incredible loan originator.
Hey, so real quick, Dan, that little fuzzy noise just came up. If anybody is listening to this in Zoom, and if you're getting some, I don't know, it's background, it's hard to hear Dan, or that you're getting this background, yep, sounds grainy. So I don't know if you could either adjust your mic or change your mic. Try it again, Dan. Holy shit, we lost you, bro. It went from grainy to bad.
How's it now?
Yeah, it's just grainy, you know, like. Well, stay tuned, guys. Dan was like a wow quality sound yesterday. He said he didn't do anything. Let's see if we can get him back into Wow Town from a sound perspective.
All right.
Boom.
Better?
That was beautiful.
All right.
All right, guys. If any golden, as Jeremy said. So Jeremy, you're pretty good, man. I couldn't figure out the word to describe it. You did, grainy, and now golden. I like your style, dude. All right, Dan. So as you were saying.
About Amber.
Amber, yeah.
Yeah. She's just incredible. Just an incredible originator. I've known her for about a year now. We're in a separate coaching group together, and systems. And she just has that extra, that wow, what we're going to talk about today. She gets it, extending the transaction, doing things that, we can all do just naturally, or you can do something and go above and beyond. And that's just what she's doing right now. And congrats to her success, because it's paying off.
Yeah. And I did another interview this week. And I think, my biggest takeaway is that success is not that hard in the mortgage industry. It does require hard work. It does require consistency. An interview I did yesterday with Lisa Gusterson. Lisa is one of the top producers for Loan Depot. And it was just a really powerful interview, because she shared some very simple, very fundamental things that she's been doing for years. And again, she's a loan officer closing over 50 loans a month because she's doing the right things right. So Dan, let's get into it. Let's talk about what has your production been for the past 3 months? Where are you at?
Yeah, we've been on a run since I would say March, but April, May, June, and July, we've averaged over 50 loans a month. We hit 61 month, and August fingers crossed, we should hit 63 to 65. So, we're in an environment right now that is, I'm not taking any credit for it other than having some really good systems in place. The other thing that I'm doing right now is I'm not burying my team. Could we do 60 to 70 loans a month? Maybe 80. Absolutely. The volume's there. The leads are there. The people are there. I'm not going to do that to my team. So my coach told me actually, it wasn't even my coach, just a great colleague, Chad Lubin, told me back in March. He goes, Dan, these rates are going to be here for a while. Find your number with your team and find it now. And he goes, you'll have 2 to 3 months to figure that out. And I think our number is about 50 to 55. They're maxed out. They're appreciative. I mean, my team, they have friends and other industry colleagues that aren't busy right now. They have friends that have been furloughed. So I'm taking really good care of my team, but I found that number and I'm just sticking with it, man. I'm feathering it kind of just back and forth right on that 50, 55 number.
Love that. So guys, we got a big group of you on Facebook Live. We got a big group of people on Zoom. Any questions you have for Dan, call them out. As you hear a big takeaway that you think is pivotal to success in this market, call it out. But I want you to hear 2 things. He's killing it, closing over 50 loans a month consistently, which is monster production. And he's not killing himself. I know because I've talked to him. How many hours a week are you working?
Yeah, 40 to 45. I mean, maybe even less, but hitting at least the 40 mark. And the reason why I know this is I have to track it for my coach. So, I have a wife that has a small business, Jenny Cookies, and it's a great business, but COVID has whooped her tail. She was just on Good Morning America in February. She was doing some really, really, really big things in January and February, had a monumental year last year, and her life's been turned upside down. And so I'm trying to be more empathetic to the situation she's in. I've got a 14-year-old daughter and an 11-year-old son. Their worlds have been turned upside down. I know a lot of originators right now that are focusing 60, 70, 80 hours a week to make a bunch of money, and it's not worth it, man, especially if you're a family man, a family woman. You got to take care of your people. And so I'm being really cautious of that right now, Dave. That's why, I respect Chad so much for saying, find your number, one for your team, because the last thing you want is your processor quitting or your loan partner quitting, right? Find your number for your team, find your number for you and your family, and stick to it. And that's what we've done. That's what we're doing right now.
Cool. So before we get into business, just on a personal note, I know that you are helping homeschool your son. How are things going personally? Just, the summer, COVID, how's everything going on a personal note?
Yeah. I mean, it's as good as it could be, right? The kids are home. The last thing I'm going to do is pawn them off on Jenny, who's dealing with how to run a bakery with the bakery not being able to be open, right? And how to continue to run her personal brand without being able to, no one's paying for social influencers right now. And that was her big, business. Big brands, big companies paid her to be, to help marketing on social media, Instagram. So family life is good. Spending a lot of time. I fish a lot in the summer. So Hudson's my 11-year-old boy is my shadow right now. He comes to work with me. We're fishing a lot. I'm trying to spend time with family and my wife and my daughter. My daughter, her world, she's an athlete, so no volleyball last year with their select season and no volleyball this fall for school. She's going to be a freshman. So trying to spend as much time around, home as I can with the family and the kids. And that's just a big part of my life. And I'm never going to deviate from that.
Right on. So anybody that's listening to this video, let's make sure Jenny gets a few more followers. It's Jenny Cookies on Instagram. Yeah. She's got 124,000 followers. So she is absolutely a legit influencer. Anybody over 10,000 followers is an influencer, and Jenny's got 124,000. So if you're watching this video, be sure to follow her and support her. She's an awesome human being. I've met her many a time. So cool. Yeah. Well, let's get into the biz. And how are you creating wow? And how are you going beyond the transaction today?
So I think we were talking about this a little yesterday on the panel. I think wow, it's hard to talk about wow if wow isn't a part of your DNA. All right. So my wife and I, everywhere we go, it's not like we're going out of our way to try and find wow, and we're disappointed if the server or if the experience doesn't provide a wow, but we're always looking for wow and trying to maybe adopt a piece of that wow into, maybe our lives as parents, our lives as husbands and wives, our lives as business owners. And so I think it needs to be woven into your DNA that, hey, I'm going to commit to exceeding people's expectations. And in the mortgage industry, it's not that hard. It's not that hard when the big banks and credit unions set the par for the course. So I think wow, you have to be looking out for it. And then wow is an ongoing process. I don't want anyone listening to this going, hey, Dan's the guru on wow. And Dan has an amazing wow mortgage business. No, it's my focus, and wow is an ongoing process. So what might work as a wow characteristic in our process last year may not work in 2021. We all know things have changed. How do you use Zoom or Blue Jeans or an online production of your mortgage process and add wow to it? So whether it be audio, whether it be visual, whether it be not doing it at home when I have kids in the background and coming into the office to do it. There's so many different aspects of wow, but it has to be an ongoing process as well. So two of those things, you always got to be looking, it's got to be a part of your DNA, and wow is always evolving.
Yeah, I love that you said that. I named the name of the company of Mortgage Coach is called Wow Tools.
Yeah.
And I think where I first heard it was from Tom Peters' book, In Pursuit of Wow, or The Pursuit of Wow,
yeah.
which it was sometime in the mid 90s that book came out. But I think that's a takeaway for everyone. Are you always in pursuit of wow? And then are you implementing and executing? And that's one of those things where I've interviewed a lot of top producers, and they know the difference between good, great, and wow. Like everybody knows the difference between bad and good. Like that's 101. Third graders know the difference. But the difference between great and wow, not everybody knows the difference. So I takeaway number one is the only way you get good vision to know the difference is to always be looking for it. Like, oh, that was wow. That was beyond great. And oh, that was great. That was good. And so I would also push you guys right now in this tidal wave of refis, in this incredible time to be in the mortgage business. There's never been a better time to upgrade your entire platform as a wow, because you're feeling good, you have the resources, and you heard it from Dan, you have the time. It's just a question of managing it. So cool. So, hey, Dan, we had a couple questions come in. One person had asked, what are you doing for your processors? So Scott Short, thank you. How are you helping your processors keep up?
Yeah.
Could you answer
Good question,
that?
Scott. So what am I doing for my processors? I'm spending a lot more time up front with the client on the loan, specifically with all of these refis, getting what I need up front, pre-qual on the borrower. So, hey, I'm having a conversation with them about the last couple of years' credit history. Is everything still congruent with your credit on a scale of 1 to 10? Before we even have them take app, I'm kind of pre-qualifying them. I'm doing a lot of the legwork on value. I'm doing the TCA. I'm gathering the documents, meaning I'm sending the emails saying, I need you to upload these documents. Listen, I can close your refinance in 30 days or less and get you the rate in the savings options report that I've sent you. But the reason why the big banks and credit unions are taking 120 days, the reason why my competitors down the road are taking 40 to 60 is because their processes aren't dialed in like ours. So if you do what I ask you to do, I can have your loan closed in a very short time. Part of that is uploading your documents for me in our portal. So I'm educating them up front what I need them to do so that when they do apply, boom, the documents are there. My loan partner scrubs them, discloses, pushes the loan forward. So that's what I'm doing there. The other thing is I drew the line, man. Scott, I found out I have one loan processor, you guys, one loan processor. I'm not leaning on corporate. I'm not leaning on anyone else in our region. I have Katie, one loan processor. I have 2 back-end loan partners and 2 front-end loan partners. That's a lot of volume. Even my coach right now is like, this is a lot of volume for 5 people. How are you doing this? And how are they all not pulling out their hair? So I'm putting more work in up front, helping them out because I knew my line. I knew my number. I don't need to do 80. I don't need to break even more records. I'm cool at 50 to 60 loans a month. And this is what I'm going to do to help them. And then I'm loving on them, man. I'm bonusing them. I bought them all a brand new Weber grill. It's a nice one too. It's like $1,900, but I bought all my loan partners and my processor a brand new Weber grill for the summer, and said, hey, I hope you have some time to enjoy this. And I want to make sure you do enjoy it on the weekends and the evenings. So use this.
That is awesome. And guys, takeaway number 2, never been more important to take a great app on the front end. You heard him. He's leaning on his digital mortgage front end, getting the consumer to do it, getting them bought into, hey, because they've all heard rates are low, processing times are slow. So he's got the customer involved. He's doing the total cost analysis. Guys, the total cost analysis saves time. And when I interviewed Jeremy Forcier and his team, and I asked his team, what's the most important piece of technology? They said the TCA, because they know what was presented to the family, and they know strategically what's being trying to be accomplished. So a total cost analysis is not only a sales advantage, it is a time saver. So great question, great answer. Tammy had asked, who is your coach?
I missed, who is my what?
Who is your coach? She asked Tammy.
Yeah, so I'm involved in the core. I've been involved in the core for the last 4 years. So they rotate every 6 months. Last semester, I had Chad Lubin. He is out of Chicago with Summit Funding. Good guy, really good guy. This semester, I have the one and only Josh Sigmund, just a stud out of what is he? San Antonio, I think.
San Antonio, yeah.
Yeah.
He's a legend. Yeah, I've heard great things about him.
Yeah.
So Jonathan Flowers just said Dan Keller is the boss. So guys, love this feedback. Keep it coming. Your sound is great. Cool. So let's get back on wow. What are you doing to create that wow in today's market? And how are you balancing refis and realtors?
Mm-hmm. What I want to do though, I took notes from our panel the other day yesterday, and I want to recite something that you said. I wrote this down from when you were talking. You said something about today's loan officer. There's good, and then there's bad, and then there's great, but then there's a next tier. And the next tier is the loan officer like Amber, like a lot of the loan officers you have that are wow. And so we talked about that back and forth yesterday. What does that mean? And so what I want to do real quick is just share a couple of processes that I use that allow me to create that wow. So my processor, for example, my team, I could just be a manager and I could just provide a job for them. Or I could be a great leader, provide a great environment, provide a great atmosphere, and a career for them. And so what I do with my employees, first off, is I have them fill out, just like I have all of my clients fill out, and my realtors fill out, an all about you form. And so in the mortgage coach community, I believe it was yesterday, there was a new member, brand new loan officer, and she asked the question, I'm new. I don't really have a database. How do I build it and what do I do? And if you want, go back through the Mortgage Coach productivity posts and see what I wrote. And I gave kind of an outline, but a part of that was have every single one of your clients right now fill out an all about you form and love on them like they're your only clients. They're like it's your life. It's like your life raft. Okay. And take extreme care of them. It's easy to do when you only have 5 clients or 10 clients. I say that it's easy to do when you only have 5 or 10 clients. It's just as easy when you're closing 50 clients a month if you have systems in place. So the first thing that I would suggest, if you're listening to this, go into the Mortgage Coach docs section. I'll upload my all about you form. Make that a staple in your business. Have every single client fill that out. Have every single employee fill that out. Have your wife fill it out. Have your friends fill it out. And that will help you to begin taking great care of people and providing that wow. Because anytime someone says, wow, man, thank you so much, that's wow. Anytime someone gives you a compliment on your business or the experience, that's wow. And so we're looking for wow for a reason. When people give us those compliments, it's a referable moment. It's our opportunity to say, you know what? I really appreciate you acknowledging that. It's a big part of our business. I made a commitment a long time ago to not just turn and burn loan applications, bring them in, bring them out, and be a transactional loan officer. My job is to stick with you until you pay this mortgage off and help you do so. And in doing so, I want to take great care of you. I want to have a relationship with you. I want to help people that you know because I like you so much. And so having a referable conversation like that to then close it with, as you, not in COVID, but as you live life and you're at sporting events or you're at church or you're at work, if you hear of people that are looking to refinance or hear of people that are looking to purchase, keep us in mind. And so just the wow plays into that. I know Jeremy was on the other day or last month and he was talking about current client referrals and how many people are referring him because of a simple email that he sends out asking for a referral. If you have a process in place, it's not awkward asking people for referrals when you've done a good job and they compliment you on it. It's just natural to say, hey, do me a favor, keep your eyes and ears open for me. I made that commitment years ago to provide wow, to provide an exceptional experience. And because I've committed to that, I don't have a lot of time to go out and market. You don't see billboards around town with me on it. So anyways, that's kind of I wanted to start off talking about, you have to have kind of that foundation to create wow. And it all starts in my business with that all about you form.
I love that. I'm so glad that you called out that Jeremy Forcier script. I just put a link to less than a 2-minute video in homework for you guys. And here it is, guys. Jeremy is a WOW loan officer. Every family is getting a total cost analysis. And when they say thank you, he is sending an email. He's built this into his scripts. So it's the same email. We love helping you. Can you help me with something? My goal this year is to work with more people I like. Space. Can you introduce me to 2 people that I should know and I can help in the future? So guys, I have shared this to thousands of people now. I have probably had 100 people tell me I'm doing it and it works.
Yeah.
And you know what? I've also had a few people saying, oh, David, it's not working. And I go, really? Well, tell me what you're doing. And I had one guy say, well, I'm sending, they're saying thank you, and then I'm sending a BombBomb video. And I'm like, first of all, BombBomb videos are great.
Yeah.
That's the wrong time and the wrong place. That won't work because now you're like, oh, thank you. Click on and watch this video. Not everybody's going to watch it. I've had people that have said, oh, when people say thank you, I just say it to them. I read the script. That's not the strategy. Now, that's not to say that if you're on the phone and someone says thank you, that you don't ask, but follow up with the email. This email works. I've had so many loan officers tell me that they have 5 or more loans in process today just because of this one simple strategy that's free and easy. And Dan, I see you nodding your head like it's like money.
So here's the reason why it wouldn't work. Here's the reason why it wouldn't work. If you're not doing something like this, don't even try that script because it won't work. So when the client is introduced to you or reaches out to you, you pick up the phone or you call them back within the hour. Okay. That's the first part of it. They're not expecting, sometimes maybe they're not expecting a call back for an entire day. Call them back right away. When you have that initial conversation, do you triangle for trust? Do you try to connect the referral source? Do you try to connect or find some commonalities between us having a conversation, not just like, hey, I'm looking forward to helping you on your refi. What's your current rate? What do you owe? Send me your mortgage statement. Okay. So we're having a triangle for trust conversation. The second thing is we're asking what are your goals? Are you looking just to lower your rate? Are you looking to lower your term? How many years do you see yourself in this house? So we're having conversations that extend the refinance conversation, that extend the, hey, what is your rate conversation? Then I'm giving them clear direction. Within 12 hours, by the end of today, I will have a mortgage savings report in your inbox for you to look at per our conversation. It'll show you what our rates are, how much we can save you, our process, and what I need you to do next. I have a simple 2-step approval process. We do all the heavy lifting for you. We know you're busy. We know that we're navigating through COVID right now, so we can't meet up. Once you have time to take a look at that report, we'll set up an online meeting or a phone conference to go over the numbers and the next steps, but it's all in that email. Then once they say yes and we plug them into the process, our wow process. I'll share it with the community. It'll be in the comment section. We plug them right into that. And I'm telling you what, when they go through all of that, the process is smooth. We give them a closing gift. We gift them throughout the transaction. At the very end, when they say, hey, thank you. Wow, this was amazing. Now you have the right to send that email. Jeremy has these same systems. Now you have the right to send that email. And that email works when you run them through that system, that process.
And when they say thank you, it has to be, they said thank you. And if you just got clear to close and they said thank you, send it.
Yeah.
But deliver wow service from the first interaction. Yep. And then when they say thank you, you make the ask. So someone just asked if you wouldn't mind also sharing a link to your you form. Would you mind sharing that after the call?
Yep.
So guys, if you were watching this in our Facebook Live, in these comments, you will have this link and this information. If you were watching this in our YouTube channel, we'll also have links in the YouTube show notes. So that's a real common theme, by the way. If you're watching any interview on Mortgage Coach on our YouTube channel, and I've referenced a link, it's always going to be in show notes. So there'll be links to total cost analysis, all kinds of stuff. So I heard you mention your loan savings report. So that sounds like how you're currently framing and positioning a TCA for refis. Did I get that right?
Yeah. I mean, the consumer doesn't know what a TCA is. The consumer, I used to call it a mortgage budgeting report. Budgeting sounds too serious. I like savings. Who doesn't like to save money, right? So I call every single one of my reports for refinances, mortgage savings options report. That's it.
Beautiful.
And it's titled. Yep.
And guys, there's no right answer there. I've interviewed countless top producers doing the level of volume Dan does. The one thing that is common, they have a name. Some do call it total cost analysis. Some call it a savings report. Some call it their online personal web page, all kinds of names. But here's what they all have in common. It's theirs. They're confident about it. They're passionate about it. And the energy in which they talk about it is different. So whatever the name is, total cost analysis, I do think for a refi in today's market, that makes sense. Dan, what did you think about that move up, that refi versus move up analysis that Amber shared? Were you on that part of the call when she went through that?
No, I missed that. I missed that part, but it's genius. It's genius because a lot of people right now are, I got an email in my inbox last night from a realtor of ours saying, hey, if I could pull $75,000 cash out, would probably stay in this house, thinking about listing it and moving up. And so it's on a lot of people's minds right now with the equity situation, with the low interest rate environment. So it's again, Amber being the genius that she is, so genius. Well, she's including it with refinance TCAs.
Yeah, well, this is only the second time I've seen this strategy. Like I've seen a lot of move up analysis.
Yeah.
I think the first one I saw was from Brian Morley, $100 million producer on the East Coast. He did a refi and move up. But guys, here's what I loved about Amber's that was so money is here's a family that lived in a $436,000 house. They had some equity. They were talking to her about a refi, but within the context of that refi, she said, hey, how you feeling about your current home? And they had mentioned that, hey, we've got another child now and we would love to have another room. So after, 4 months of quarantine, we'd really like an extra bedroom. So they could save $322 with a refi. And she said, well, hey, you could only put 5% down. And because they had a lot of equity, it'd give them an extra $125,000. So you could buy this home for 5% with the proceeds and put $125,000 in the bank. Or after you close, buy your new home and you sell your home, we could recast that loan. So we'll bring it down. And in this particular case, with all the extra equity they had, they could have got their dream home and actually had a lower monthly payment. Now, what they're going to do, look at this, guys. They're literally going from, hey, if you stay in the home you're at right now, no extra money in the bank, and about a little over $500,000 in net worth in 15 years, or you can move up in your dream home and have almost $1 million in net worth. So, dude, I love this because this is life-changing. I mean, this is a game-changing, life-changing situation.
Yeah.
Have you started doing that yet? And are you seeing many people that are kind of in that circumstance?
Yeah, I mean, we've had people ask, and so what the mortgage coach software does is it answers the questions for them. Like they don't have any idea how to calculate it. They don't even think it's an option. A lot of the confusion right now in the market, and I think loan officers are even confused, is what these new rates mean relative to home value, to buying power. And so I've done a lot of buying power type TCAs where, if rates were at 4.25, this is what you qualify for. We have this blessing right now at 2.75 or 2.5, wherever they might be. Look what this does to your buying power. When rates go up in the next 6 months due to inflation, this is a huge opportunity. So consider this now. We've had more first-time homebuyers break their lease, meaning pay an extra month or pay the fee to break their lease to take advantage of this opportunity than I've ever seen in my career. And so I think I'll share my TCA with you guys in a minute that I'm using right now to show the true benefits of buying now versus waiting. But I'm using the more buy now versus wait. But I love this. I'm going to adopt that with Amber right away.
Yeah, another person I see doing that is Michelle Castle did a Facebook Live with a real estate agent. It was only 15 minutes long.
Yeah.
And guys, it was pure money because she had a realtor kind of taking, hey, what's happening nationally? And this is what it means locally. They live a little outside of Dallas, Texas. So in our market, this is what it means. And then Michelle pulled up a move up analysis. And guys, I guarantee they get business from that. So that's another thing Amber mentioned in her interview. She's going to start doing Facebook Lives and Zoom calls with real estate agents to create transactions. So guys, I just put a link in chat if you want to see Amber's TCA and you want to check out that interview, which I highly recommend you do. There's some links in chat. So Dan, we're 35 minutes in. We got 25 minutes left. What do you want to make sure we tell people about? I want to make sure the wow that you're creating, the beyond the transaction that you're doing comes out. So what do you want to make sure we get in today's call?
Yeah. So let me go back and recap what we've already talked about, because I had like 4 points that I really wanted to make so that none of you guys were confused in regards to one thing I hate when I go to conferences or I'm on a webinar or I'm listening to someone is they'll share this amazing idea, but they don't share the why behind it and they don't show the how to implement it. So I want to share the why behind the whole wow idea. So we've already talked about wow needs to be on your mind. It needs to be in your DNA. We've talked about wow being an ongoing process. So it's something that it's ever evolving. You're focused on trying to one up your wow systems at all times. Some of the things that I want to talk about in kind of closing the gap on this whole wow thing is wow begins with you. Okay. It begins with you bettering yourself. From a self-improvement standpoint. You can see behind me, there are a lot of books there. This is a fraction of the books that I have, but these are the ones that have really made impact in my life. When a student athlete of mine comes into my office, when a client of mine comes into my office, or a realtor or a loan officer, these are books that if they were to say, oh, I've heard of that book, but I haven't read it. Cool. Grab it, read it. It's changed my life. And so wow begins with you. You have to constantly be trying to improve yourself every single day. And that's a challenge, but it pays off. The other thing is when I say wow begins with you, it begins with you in the process. So whether you are a branch manager, whether you're working with realtors, whether you're working with borrowers or at home, it's when I say it starts with you, whatever process you're heading into, they need to have some perception of wow right away. So when I say it starts with you as a loan officer, how does your personal branding look online? How does your Yelp or your Google review page look? How does your Zillow page for reviews look? How does your website look? How does your social media look? Are you talking about politics all the time? Are you talking about things that really don't add value to other people? Or are you being of value? And so I think when we talk about wow, you have to look at all of these other factors that play into wow beginning with you. And then you have to build out processes. I personally, this is just me personally, I joined the Core 4 years ago because I literally just needed someone to say, Dan, plug into this process and make it your own, make it better, but I needed a roadmap. And so wow isn't going to work without systems. So you need to start building systems. One of the first things my first coach in the core had me do, her name was Nikki Salter. I absolutely love her. She's another big producer out of Texas, San Antonio. She had me build out a wow process, a checklist. And it started, and it titled at the top, pre, and I'm going to share this with you guys so you'll have it, pre, during, post. And so I built mine out, and then I shared it with her in the group, and then she shared with me hers. And that explained why I was a $45 million producer, and she was at 30 years of age, a $100 million producer. And I was like, good God. So I adopted those processes, and I didn't do them all overnight. I started with, okay, let's go pre, and let's really build out this pre, because if we get better at the pre-wow process, what does that do? It helps you convert. You can convert more deals. And then the during helps you get more referrals. A better experience during helps you get the thank you, Dan. You guys are awesome. Oh my God, you and your team were so great. Cool. And then the post is what we all should be doing anyways, and that's ongoing client care. And so don't try to build this thing out overnight. It takes time. And like I said earlier, it's a forever ongoing process of improving your wow. But I wanted to talk about that first so you all kind of understand it. I didn't just, cool, I bought this system, I plugged it into my business, and it works. You have to have the right players too. You have to have the right people.
That triggered a thought, and you follow Ryan Hill's The RE Source, and he released a video this week, and I think the title of it, What's Your Source? And it's just like a 5-minute rant, but it was all about like, what are you feeding your mind so that you could be a wow? So I love that you took that, like, you got to do it from the inside out. So right now, today, what is your source? And what are you also not your source? Like, I'm not doing this, and I am doing this. So just give us like a 3-minute, what's your source today? And everybody, I did put a link in Facebook. I think you'll need to, I don't know from a permission standpoint, it's the RE Source. So check it out. So right now we are in August 2020. What's your source and what's not your source?
Yeah. So personally for me, my source is, I'm always trying to grow as a mortgage professional, period. So my source for that growth is the mortgage coach community. I don't always listen to your interviews live right on the spot, but I drive often. I run a lot, and I fish a lot. And so you plug it in, and you just you listen. I mean, it's just incredible how much information you have available just on your channel. So as a mortgage standpoint. From a mortgage standpoint there. The coaching program I'm in sends out weekly CDs. I've just bought in. These are top producers. These are people that are producing where I want to produce, or they have the systems or the branches or the teams that I want to build. So I listen to those. And then from a personal standpoint, God, I'm obsessed with this guy right now. Brendan Burchard, High Performance Habits. I'm reading this book right now, and I bought his daily planner as well. Follow the guy on Instagram. It's fruit for the mind, man. It's just healthy vitamins for the mind, and it's an encouragement following him. But his principles for living a high performance life are incredible. And ultimately, I think that's what all of us are trying to achieve is just higher performance.
So interesting that you called out his Instagram, because I'm a Instagram guy, and I'm pretty thoughtful about who I follow and who I don't follow.
Yeah.
And there'll be people that I follow that sometimes it's noise.
Yeah.
And let's face it, in the market right now, there's a lot of noise,
Yeah.
and there's a lot of comments, even people I like to follow, that it's noise. It's things that sucks the energy out of me, sucks the wow out of me. What are you not doing?
Yeah.
And how are you kind of filtering out some of that, call it anti-wow news that's in your feed?
Yep, I'm not. So, man, I've unfollowed so many people. One, I'm not spending a lot of time on social media. Me personally, like scrolling through, I'm posting. So one of the things I'm not doing is I'm not getting caught up in the negativity. And regardless of your approach or thoughts on COVID, left or right, regardless of your thoughts on politics, left or right, stay out of it, man. Stay out of it. It's poison. I posted a month or two ago on my Facebook page. It's poison. Everything we're reading and seeing right now is not helping you upstairs. And so focus on love, focus on building other people up, focus on your freaking family. I mean, this is the thing. There's so much energy out there on things that you can't control. Focus on your home field. I call it having your home field advantage at all times. I'm a sports guy. Focus on your family, man. Be more empathetic to your wife and your kids. Your employees, they're burned out right now, man. I mean, yeah, we're cashing these huge checks as loan officers. We're bonusing our staff, but they're not making the big money. So being more empathetic of them, empathetic of our clients, the unknowns, our first time home buyers that are confused right now. And I'll share a TCA in a second that helps with that confusion. But what I'm not doing is I'm not getting involved there. The other thing that I'm not doing right now is I'm not working with clients that are going to give me crap. I'm just not. It's awesome. If I got a client, I've been able to let a few clients go. I have pipeline calls with my team every single morning. If someone's giving us grief, I have a phone call with them. And I say, listen, if you're not willing to get us these documents, we can't help you. It's really that simple. And we've let a few people go. So we're being more selective on who we're working with. And I'm being more selective what goes in here and what goes in my eyes.
Love, love, love this. So guys, what's your source? I would love to get a little collaboration from the mortgage coach community. What is the source? And since, it's text, put in like your one or two top sources. And also, if you want to collaborate in whatever channel you're watching this in, what are you not doing? What are you doing less of and getting in the noise and pulling you out of the wow? So I want to make sure we do cover that TCA, because this is the Mortgage Coach channel where we turn loan officers into mortgage advisors. And better than that, we turn you into black belt and orange belt grandmaster mortgage advisors. So what kind of mortgage strategies are you doing right now in today's market?
Yeah, big one right now. And we're having some fun with refis right now. Everyone is. But do not let go of your realtors. Do not give up on your purchase business. I think it was you guys back in April. I was on a call. The second COVID hit, I called up my web guys. I have some local social media guys. And I said, I want to meet with you guys and I want a strategy. There's going to be more people on their phones in front of their computers than ever. And I want to double down on my Facebook ads. I want to double down on the programs. I want to double down on the content that I'm creating and get that out. And so one of the things that we're dealing with right now is a lot of purchase business, which is incredible. The biggest objection I'm getting right now, and I know I'm not alone, and I guarantee, give me a thumbs up in the comments, or if you're listening to this, a thumbs up if you're hearing the same question. You have a call with a prospect, you have a call with a client, and through that conversation, they have fears about the election, the economy, COVID, home values crashing. We're heading into a recession and the market's going to crash. Okay. We have a great conversation. I sent them a great TCA, and then I'm following up, and then there's no contact and they're not getting back to me. They didn't apply. Finally, when I have a chance to connect with them, reconnect with them, I ask them how things are going, and it goes a little something like this. Hey, I was talking with my dad, I was talking with my grandpa, I was talking with my boss, and they said that the market's going to crash here in Seattle and now is not a good time to buy. So I'm just going to wait until it does that, or I'm going to wait until next year. So I think a good loan officer would respond to that with, is your dad a realtor? Is your grandpa a real estate investor? Maybe with some questions like that. I think a wow loan officer would respond to that question like this. So what I've done is my conversation looks like this. I think your dad and your grandpa are right. I think there's merit to that argument. So let me put together some numbers for you, and I'd like you to share this with them, and I want to talk with you about that. So how these numbers look is if you were to buy in 2020, a $650,000 house with 5% down, your interest rate's 2.625, your total monthly payment's $3,209. If you were to wait for a deal, let's say we wait 6, 8, 12 months for a deal, home values drop 50 grand here in Seattle, but interest rates go up due to inflation to right where they were at pre-COVID, 4,125. You're actually paying more money for that house than if you were to buy now. Okay. Now let's say grandpa really thinks that a big crash is ahead. And let's assume, or even have a conversation, that home values drop $100,000. If home values drop $100,000 in the next year, and you were to purchase at 4,125, but a 550 purchase price, your monthly payment would be 3,147. We're like 50 bucks off. In the meantime, you've paid down your mortgage. In the meantime, you've received tax incentives. I can promise you it makes sense to purchase now versus taking the chance, rolling the dice on a market crash. Now, what I want you to do is I want you to ask your dad and I want you to ask your grandfather and a real estate agent too, if they feel like the housing market in Seattle over the next year or two is going to drop by $100,000 in value. And 99.9% of the people are going to say absolutely not. And I've had an educated conversation. I've educated them. I've enlightened them on a financial decision versus just replying back. When you reply back off the cuff, it could be kind of almost divisive, like you're selling them or you're pitching them versus educating them.
Boom. Guys, not only was that a wow, where any client, whether they agree to move forward or not, is a wow, but it's beyond the transaction. And this is the theme for the loan officers that are killing it. Not everybody has the leadership skills, has the ambition, has the desire to do over 100 million a year in volume. I get that. But I don't care what volume you're doing, whether you're doing 10 million a year, whether you're doing 40, 50, 60, if you're not going beyond the transaction and having conversations like that with your client and visually showing them strategies, Amber's move up analysis, Dan's cost of waiting analysis. By the way, Dan, people are asking for that cost of waiting analysis.
Oh yeah.
Do you mind putting a link to that in the group?
Absolutely.
And guys, the name of it's going to be Dan Keller's 2020 cost of waiting analysis. We'll put it in the link below. If you're watching this on YouTube, link down below. And that's really every market's different. I mean, what the cost of waiting analysis in Seattle is going to be different than the cost of waiting analysis for Amber in Chandler, Arizona.
Yeah.
And it's going to be different for Brian Morley in Columbia, Maryland. So every market, there's going to be nuances that are different. But I mean, again, if you want to be a black belt mortgage advisor, if you want to be able to tell a family, my advice makes a difference.
Yeah.
If you don't have one of these, don't say that because it's not true. Dan, you were going to say something.
And please know this, you guys, it's not about volume. It's not about Jeremy doing 200 million a year and Amber doing 100+ million a year. It's don't look at that and be turned off. Nobody likes to go into a fight and lose. And the way that I look at a mortgage application is not necessarily a fight, but it's a competition. Every deal that we go out hunting for or fishing for, there's a battle. It's a battle because we don't have it until we close it and we get paid on it, right? And so look at it that way. Whether you're closing 2 loans a month or 100 loans a month, when you get that fish on the hook, let's get it in the boat. And so by having these conversations, by using a total cost analysis or a savings options report, you up your chances of that fish getting into the net.
Beautiful. So I want to show Amber's savings analysis report and tell me what you thought of this. So what she's doing, and she talked about it. She actually, guys, I put a link to it. She put a video on it. And this video is for the mortgage coach community. I mean, this is where she said, hey, I'm a coach. And this is a video for the community. So check it out. But she said, this is what I do. My day job is realtors and purchase business and move up analysis and killing it, putting families in homes. And my night job is doing refi analysis. And this is her standard move. Current loan, refi. Now, she said this was a very big savings. Most of her clients aren't saving that much. She said that was a big one. But every single time she is showing people, if you just took that savings and you prepaid the mortgage, how much faster would you become debt free?
Yep.
And she is saying that I am doing that for every single refi. And she's putting a video, and her videos are like a minute to no more than 2 minutes.
Yep.
What are your thoughts on that?
Yeah,
Dan?
the only thing I would change on that, and I learned this from one of you guys probably a year. It was probably a year ago. We were talking. You were on a call with, it might have been Wally or someone on annual reviews. Okay, if we can go back to her report. The only thing I would change is I have a hard time refinancing someone right now that's been 4, 5, 6 years into their term without showing them a term reduction. I don't want the objection, hey, Dan, are we resetting my term back to 0, back to 30 years? Yes, we are. Or, so what I would do if I were her, and what I do personally, if I'm going to show them how to have a 21-year break-even point, I'm going to throw in a 20-year fixed rate mortgage option next to it, saying 20-year fixed. And then what I'm going to talk about in the video is the importance of this refinance, of her reinvestment strategy being you have more flexibility should you encounter hard times than just opting for a 20-year fixed rate mortgage.
I love it. So good idea, everybody. He's showing refi. Every loan officer shows refi. Like, that's not beyond the transaction. That's not being a wow loan officer. That's not even being a great loan officer. Like, if you are giving a family a fee worksheet, that looks like this or looks like this, that's not great. If it's accurate and you close it on time, it's good. Mm-hmm. So if it's not accurate, it's bad. But guys, that's not great. That's not wow. This is a transaction. Again, if you want to be a beyond the transaction loan officer, there's 3 things you need to do every time. Show options. Always compare those options over time, number 2. And number 3, always look for strategies to reduce the debt cost, whether that's reinvesting the difference in the mortgage, or whether that's like Amber's move-up analysis, where she said, hey, we didn't reinvest the difference. Oh, actually, this is someone else's. Yeah, this one right here, where she took the money and they put $125,000 in an asset account at 6%. Yep. And showed that, hey, in 15 years, that's going to be 300. But because that's what going beyond the transaction is. So Dan, we only got 5 minutes left. Is there anything else on your agenda that we didn't cover yet that you wanted to make sure was covered in today's call?
Yeah, one last thing. Go refinance all your realtors. Tell them you will do a no-cost refi for them. That's what I've done. And I've got 7 or 8 of them done. And when I say no cost, I'm paying the loan fees. I'm giving them a lender credit for our loan fees and our appraisal. And the reason why I'm doing this is I want them to see our process. I want them to meet my team. I want them to become more familiar with cross-country mortgage. So go refinance your realtors. That's my closing comment.
I love it. So let's close out with just talking about Tina Bellevue. So guys, this is a picture from Facebook. You can see the date on it. It was 2015.
Back when my hair was brown.
Remember that? Remember that time?
Back when my hair was brown. Yep.
So this is Tina Bellevue. She's a top agent out of Baltimore. We're going to be interviewing her for the Mortgage Coach community this Tuesday. Dan and I are going to co-host that. If you have questions you want us to ask Tina, let us know. Put them down below. Couple things that make Tina pretty unique. First of all, she's super successful, but she's a Facebook queen. She tells her story how I loved Facebook when I was in college, how I used it, when I became a realtor, how I used it. Yep. And since then, she still uses Facebook very strategically, but she uses her database really strategically. So we're going to talk about database and Facebook as marketers. Dan, anything else you think we should cover with Tina on Tuesday?
Well, I want her to teach us how she puts all of her clients in a group in Facebook, and she just loves on them. And she's all Tina's doing is she's where they're at. That's it. She's where her clients are at. They're on social media right now. So she's there and she's giving out gifts and contests and showing her successes. So I can't wait to be on that call. Tina's amazing.
Love it. So let's see what kind of questions we have. So first of all, Sean just said something super nice. Dan brings so much value every time. Such a stud. Another great mastermind. Sean Guerrero.
Thanks,
appreciate
Sean.
that, brother. Jeremy said, why would she not show a 20-year loan with most likely a lower rate? So Jeremy, I think Dan covered that. But I think the answer is the flexibility of it. You know, like netting it out, they're probably going to want to be flexible. But like Dan said, he's going to do both. He's going to say current loan, savings, a term that is an option for you. It might be 25, 20, 15. And then he's going to show pick your term, prepay your mortgage. By the way, Dan, can you just pick the year? Can you do a 28-year loan? Can you do any term of loan?
Yeah, I mean, and most of us can nowadays. So, hey, Jeremy, one of the reasons why I love this group is because of this. So a year or two ago, when I heard that interview, I was like, dude, I didn't even think about that. My clients probably pissed that I'm taking them from 26 years and resetting it back to, or at least I'm holding something back. All right, cool. So I'm going to do a 30-year, I'm going to do a 20-year, I'm going to do a 15, I'm going to do a reinvestment strategy. So that's, Jeremy, that's why we're in this group, man, learning from each other. But yes, Dave, we can all do, you know, I did a 12-year. Boeing Credit Union has a 12-year fixed here. And it's actually, our rates are better than theirs. So I started sending 12 years out. When someone asks for a 15, I send them my 12.
Love it. So guys, if you have any questions, we will try to get them in before we close this out. I'm going to close with a quote from my LinkedIn. I don't know how many of you guys on this call are using LinkedIn strategically. For the past few months, I've tried to up my game and just create more value. Tell stories and strategies. Some of them are personal. If you're not following me on LinkedIn, you should. But I'm gonna close out from this, guys. This is a quote from the founder of Zillow. And guys, this is a quote from 2017 at Inman in New York. And he said from stage, I did not edit this in any way, shape, or form. From stage, the agent of the future is a coach and advisor to home buyers and sellers. So guys, and he mentioned the word coach multiple times. So I want you to all think about, am I really a coach? Am I really delivering advice beyond the transaction? I think I hear a lot of loan officers, they do a lot of education about the transaction, setting expectations, and they do a great job of education around the transaction. But are you going beyond? Cost over time, strategies to pay off debt. Also, stats and facts around the marketplace. I see a lot of loan officers giving this macro national economic news. But guys, are you localizing it? Are you saying, hey, this is what's happening national, this is what's happening local? That's what a coach does. But what a coach really does is they take it from national to local to personal. Like, how do we now, and that's what Dan's doing. He's like, nationally, this is what's going on. Grandpa's worried about locally what's going to happen. Dan's making it personal. He's coaching them. He's taking their personal assumptions. He's helping them make a personal decision. Guys, be a coach. Be a mortgage coach. Dan, any closing thoughts?
Great. You hit it on the head. That's it. I think the originator of the future is an educator, and you couldn't have closed this out with any better thought.
So guys, we hope you got value. If you like this call, give us a like in whatever social media you're watching it. If you loved it, which I did, I always love anything with Dan, give it a love. If you are a leader or a manager and you mentor other loan officers, get them in this community, the Facebook group, the YouTube channel. Guys, we're here to feed your minds with things that inspire you and things that make you better. Have an awesome week. This call is a wrap. Take care, y'all.